fires out here in Colorado.
Well, we're live, and let's start off with saying that this morning Goldman Sachs gave Penn an upgrade. I don't know where they've been for the last 6 months and the last 30-point ride here. They should have been recommending that stock about $20 a share, and now it's at all-time highs. Look, I talked about this for a second yesterday. I think Penn is, there's nothing that's going to stop that stock from getting way higher. I think mentally there were probably a lot of people that bought Penn when it was at its all-time highs a couple months ago, and then it had that shake-up. So naturally, you probably had some resistance at the top where people were selling once the price got back to where they bought, just wanting to get out. And now, you're at all-time highs. I don't see what's going to stop that stock from just going way higher. And then yesterday, I think the S&P closed just shy from its all-time high, so it's not quite there yet. And I think it was there for a minute, but didn't close there. And it'll be interesting to see. I know I put up on Twitter yesterday that, in my opinion, this is either going to set up for the nastiest double top of our lifetimes, which sometimes happens in charts where you hit the top twice and then it's a huge bearish sign and it goes back down, or this will set us up for one of the biggest bull runs of our lifetime. I think either one, it's not going to be just normal. I think we'll have an extreme outcome one way or another, whether it's a epic collapse to the downside or an epic bull run. I kind of think that it's probably just going to be an epic bull run just due to the fact that, there's so many things pointing to that. It just seems like it's almost inevitable, which scares me a little that I even think that. But curious to hear your guys' thoughts on where you think things are going to go from here. We're obviously at a crucial point here in the market.
Sad.
Yeah, I mean, look, you're asking the wrong people. We completely got it backwards yesterday. We were talking about the industrials, cyclicals, banks, all that, and they underperformed. They opened up and traded down the rest of the day. They look like they're going to open up a little lower today. So tech is still, back in the driver's seat. As far as the market goes, I don't think anything's changed other than we're getting closer to the election. So there's still a ton of money on the sidelines and a lot of people underinvested. Rates have gone up so slightly that I don't know how that matters to people's investment decisions. So I think there's no change in opinion here.
Well, it's obvious, like Dan highlighted yesterday, about some newsletters going out to a lot of these big institutional investors on Wall Street about Kamala Harris being, big money friendly. I mean, that woman looks like someone that has a lot of money in the market. Let's be real. She played politician to the point where she got herself in this position. She is not the worst thing in the world. Elizabeth Warren is not there. And I think as long as Bernie and Elizabeth Warren weren't in the mix here, we're going to be all right regardless. So that definitely was probably part of the last couple of days where we had some momentum. And again, with the tech, why wouldn't tech drive everything? We're in 2020, tech's the world. I'm kind of tired of hearing this narrative around this being some shock. This is going to continue on a whole nother level, I think.
Well, I kind of think that it's getting stretched for various reasons, but this idea now that some of the bigger companies are going to do splits definitely fueled a lot of the rally yesterday. I mean, Tesla doing that split changed the narrative.
Well, think about it, because as an investor that doesn't have a lot of money, the psychology behind, we've talked about this.
It's all about psychology, because it has nothing to do with the value of the stock.
But it's someone that wants to have less of a barrier to entry where they feel comfortable buying a Tesla. And, they're like, oh, well, I'm just getting into the market. They're way more likely to get in Tesla if it's not something they have to spend $1,000 on one share.
Yeah. But, here the stocks don't split, Apple, Tesla, till the end of the month. Yet who's buying it anticipating the split. Probably the hedge funds figuring they'll sell it to the Robinhood crowd. You know,
Yeah, that's kind of what I was going to ask you, Dad, because I've been trying to just think about this myself on a bigger level. Is when they keep talking about these splits and how big it is for the retail investors. Do the retail investors really outweigh the hedge funds in a way where they could actually have stocks like Tesla continue to go up if the big money decides that it's overvalued? Is that really how it's going to go?
No. At the end of the day, we don't know really how big this retail crowd is that seems to be growing by the day. And are they bigger? I don't know if they're bigger, but they can have enough impact in one stock or one or two names to outweigh what anyone else is doing. There's no question, because it's a supply and demand game, and you know, at any given time, they could be bigger than the other side. And it doesn't take much to tilt a stock from a sell to a buy or vice versa. You know, you only need 51% of the dollars going in versus 49 going out for a stock to be up, basically.
That's true. Well, right now I pulled up because I was looking at this a little yesterday, and I just thought it was interesting, and I'll pull up a couple of them. But just the QQQ, which is the NASDAQ index funds, and I have the Bollinger Bands pulled up here. And if you really look, ever since the beginning of April, this thing has been in such a tight, specific trend line that it really hasn't broken at all. And anytime it like breaks it in the slightest bit, it goes right back into it. And it'll be interesting to see like how long this could really go for. And the NASDAQ continues to just be in this line. And then what happened really a couple of weeks ago or last week when it looked like the NASDAQ was starting to break down, it got below that trend line just a little, but then quickly came right back into it. And now it's back to business as usual. So I don't know how much you could look at this, but until this really breaks, to me, this is a great indicator on what's going on. And again, if this is going to continue in the direction it has, you have a little bit more in the NASDAQ short term, and then you'll get a little bit of a sell-off, and it's just going to continue. And that's really what we have. And you even look at
to me, you know, I'm looking at this chart, and the most interesting thing to me is how heavy the volume has remained since the fall, since the fall of the market. Because if you look back before the pandemic, the volume looks about half. And if that volume keeps up like that, that's probably a good sign that, it's not overheated volume, it's just more volume.
Well, like you said, there's been money on the sidelines. So, where else is there to put money with where rates are?
And also, I know we talk about the relative strength index on here, a good amount, the RSI, and I have that pulled up down here. And just looking at the 1 year RSI, I mean, the NASDAQ has a lot of room to go. Like, it's not really overbought yet. And maybe short term, short term is always different. It kind of goes back and forth. But if you're really looking at just the big scope of things, it's not crazy to think that this goes higher.
Well, you also have to look at each individual name, unless you're playing this specifically, because there's obviously in the NASDAQ 100 quite a few names that are overbought, and vice versa. So that's why it probably has a more neutral look than the individual names.
Yeah, it all seems like, just due to everything happening in the atmosphere we're in, that these are almost the easiest trades to make. I haven't been doing it on them all, but I always look at the indexes each day just to see what's going on. This is the SPY, which mimics the S&P, and a little bit different. It's been way more choppy, but really since the beginning of July, it got on really that same exact very, very tight uptrend line as the NASDAQ did, where like starting, July 1st, it's been in a perfect uptrend line. And based on this chart, you can kind of maybe expect a 2-3% dip, just not even a correction, but just, a little give and take as it continues to work its way up, which might be what we started to see yesterday in some of the names, even though as a whole the S&P was obviously way higher. But to me, this is really interesting because it's just in such a tight range line. And obviously, until that breaks, I think you could almost use this as levels of support and resistance for the market as a whole.
Yeah, and while we're talking, the jobless claims just came out, and better than expected.
There we go.
The market rallied to unchanged again. So people are getting jobs, and there's a lot of jobs out there apparently in different areas. So, what happened? We lost Danny?
He's
I just
there.
ran to get my cup of coffee. So what the claims fall to pandemic lows? Yeah, I mean, look, and you can almost see that firsthand in life. Like, there's people I know that didn't have jobs due to the pandemic that have all been all excited about new jobs that they've been getting. And
But what kind of new jobs are we talking about?
Similar jobs as old jobs, like working in sales as reps, doing things that
take her cousin Debbie. Debbie's got a great job right now. She has a better job than she had before. It basically just took some aggressiveness to get in that job market, and there are jobs out there. There were jobs before that people were advertising, but they couldn't fill. So maybe this is a nice reflushing of the economy by the time it's done.
Well, I think like we've talked about, there has to still be a lot of new education happening. Well, I'm curious to see what the next wave of job creation, because I look at a lot of current jobs, even in the past, as irrelevant, really. With these, there's so many reps in sectors that aren't needed, really, at the end of the day.
But at the same time, not to get too much into this, but when you think about what businesses need most, and we could think about this for our own business, it's reps to go out and push the business. So
there's no doubt sales reps are very valuable and specific, like in our industry, without question. I think there's just, as we've seen, there's definitely watered down approaches with a lot of these sectors where they just have employees on the payroll for who knows what reason.
Yeah, for sure. And just to kind of talk about for 1 second what Dad was saying when we first started. Yeah, I mean, yesterday, the picks that I was going to follow and did follow all day were just absolute train wrecks. I never actually bought win. I did trade play. I didn't buy. I actually bought play at its lows yesterday, which I felt pretty good about and was able to kind of trade it up a little. But Ford, win, and play were the three names that I thought were going to continue their rally yesterday, and I could not.
I bought more Ford yesterday too.
Yeah, I mean, it was
Ford's hanging in there. I think part of Ford's problem yesterday was Tesla getting all the, headlines.
Mm-hmm.
That's a good point. That's a really good point, actually.
It kind of flushed in if you consider Tesla an auto company. I mean, it's hard to consider it an auto company like the others, but that could be part of the reason that Ford has.
That's actually, I didn't even think about that, but you have to consider Tesla an auto company just in terms of, like, if you're sitting there and you're thinking about wanting to buy an auto company, that's definitely fair game. It's not like they're just a tech play. And then, I mean, I know we bring them up a lot, but DraftKings, they're starting to, and I know their earnings are tomorrow morning, so I think part of it is people trying to crowd into the stock just to get ahead of it before earnings. But I mean, what are your guys' thoughts here? Because the one thing that scared me with DraftKings is a couple things. One, like a couple nights ago when I was watching an NBA game, I saw that the sponsor was FanDuel. And it kind of reminded me, like, oh, yeah, there's still FanDuel. And
I think DraftKings owns FanDuel, Dan.
No, they don't. There's another company that's another public company that owns FanDuel.
Are you sure?
Yep. I forget the name of the company, but there's like a holding. It's a public company that never gets talked about.
Oh, I thought they rolled them up.
I think it's a European company that owns FanDuel or something. Are you looking it up?
It's actually Paddy Power. It's an Irish company owns them called.
I mean, I don't see. I look at
Flutter
that.
Entertainment.
I don't see that being sustainable. I think they'll end up being rolled up by DraftKings.
Well, they got rolled up by one of those bigger holding companies.
I know, but I see that just being a consolidation. That doesn't really make any sense. I mean, there could be a couple players in that space, but
Well, there's a lot of players in the space from the UK because they've had gambling forever.
yeah. I mean, I used FanDuel before DraftKings when this whole game started a few years ago. That was the first one.
Yeah, it was actually an Irish bookmaker bought them, Paddy Power.
That's why I was kind of saying, Mike, like the few times I've used these fantasy gambling websites, I've only used FanDuel. I've never even used DraftKings. I love the
DraftKings is way better. I've used both. It's night and day.
And I also think DraftKings, it wouldn't shock me if you saw like a Las Vegas Sands or a Wynn try and roll them up one day. Like I think they're gonna have really good earnings with a lot of good things to say. And I think the fact that college football is still happening, whether or not it's every conference, one big conference, who knows how it's going to actually pan out. But, I also know that guy is similar to the CEO of Zillow in terms of he's a pump-up guy. He's going to get on the call and have all kinds of good things to say, regardless if they're true or not. And hopefully
the Zillow guy, though, is not – he's a pump-up guy with a ton of credibility. If you look at his background, it's not like he's
I'm not saying at all that they're not killing it. Same with DraftKings. I'm just saying that like there's certain CEOs that seem to come on there and have like kind of a really careful outlook and try and almost tamper the expectations. And he's just not one of those guys. So I think if you're a holder of that and people buy into it, it's a good thing.
Yeah. And one thing is they're not going to have great earnings.
But no one's expecting great earnings.
Right.
Everyone already expects these earnings to suck.
So it's a matter of what they say, and that remains to be seen. So
and then I'll say, did you guys see? I'm not sure if you can talk about this on here. I know for a minute we talked about the California ruling with the independent contractor thing with Uber and Lyft, but now they're both saying that they're going to pull out of the entire state if the state votes that law.
Well, they almost. I think I sent you a text on this. They almost have to do that, otherwise, other states are going to say we could do the same thing.
Yeah, I think that's going to also get California to pump the brakes on that. I don't see that law going through.
They have it on the ballot in November.
Yeah, I know, but that doesn't work.
What do you mean?
There's no alternative. It's like it sounds great in theory until you break down the economics on both sides. It actually doesn't work. So I don't know who's trying to create this whole system that's broken to begin with, but they're better off keeping things as is, or they're going to.
It basically started from individual drivers suing.
Yeah, and we saw how that worked when they started Juno, their own taxi company that went under. These people, they love the notion of being rebels, but the reality is they don't have any leverage. So 2/3 of these people want to stay as independent contractors, and if they want to become employees, it's not going to be appealing for them to be drivers at all. When you really break it down, that gets the flexibility completely away from them.
Well, we'll have to monitor that for the stock purposes and for our own purposes.
I mean, trust me, I wish we could make drivers employees. That would be, if there was an economical way to do that, I think everyone would love it.
Yeah, you could deal with the payroll, Mike.
I'm not an accountant.
Are you guys looking to make any day trades today? You got any stocks you're looking at?
I've been so bad lately at it. What I should have done is just bought Apple on the dip and taken a trip into the mountains.
Yeah, seriously.
Apple goes up every other day. It's within pennies of an all-time high again. And I think they said something today about their subscription rebundling, and as soon as they mention that word, everybody goes crazy again. It's up.
Apple's just scratching the surface. I think they are just going to be just soaring for years with where we're heading in the world.
But away from that, that's a long-term position. The stuff I've been dabbling in has not been working lately, so I got to come up with new names or a new strategy, at least short-term.
That Duncan.
It's kind of funny.
I don't know if Duncan's a day trading stock,
Let me just say real quick with Apple, their whole subscription bundle. I mean, do we not all agree that at the end of the day, all that is them discounting all their products? Like everyone's reacting like, oh, this is such a positive. Apple's taking a bunch of things that people are buying separate and bundling them together for a cheaper cost. I don't really see.
They must have looked at the economics of that, and they feel they can get so many more people on board that
exactly
make more money.
Activating new lifetime users, because as we know with how powerful Apple is, once you're on their products, it's very tough to leave them.
Now, I noticed today, I have on my screen this company Revolve. Did one of you guys mention that name to me?
No.
What's the ticker?
RVLV, I believe. Hold on.
No, RVVTF, Dad, was the psychedelic stuff I was telling you about.
Yeah, but RVLV, someone told me about this stock, and it's up from 19.5 to 23. And it's on earnings. And I looked it up, and it's a fashion stock of some kind.
I think that might be the Conch, one of his.
Oh, is that not the Rent the Runway stock? Is it?
I don't know. Maybe it is, but they sell a bunch of designer dresses, shoes, out of California and a few other places.
Let me see what this company is. Revolve Group. Yeah, I mean, they're up huge on earnings today. That'll be a fun one.
I don't know what the story is there, but someone told me about it. Maybe it was Mark.
And Dan, don't we have HPQ earnings tomorrow?
Is that tomorrow?
Or is it today? Aren't those coming up?
Let me see.
Because I feel like that thing is about to pop. It's been kind of the last couple of days, let a little wind out of the sails, but it seems like it's ready to.
Their earnings are not till August 27th.
Oh, okay. So 2 weeks.
Yeah. And by the way, Cisco is in the Dow, and they had earnings that were disappointing on guidance.
Who?
The earnings, but the guidance. The stock's down almost $4.
What stock?
Cisco.
No thanks. I hate that stock.
I saw for a minute when Lyft reported their earnings yesterday, they surged up big, but then something he said on the conference call sent them right back down. I didn't see what it was.
Yeah, they basically were like, it's impossible to profit with this model.
And I saw that Twitter had unusual option activity on the downside that pointed to some bearish signals. So now I'm back to starting to think that, I don't know, I own this name. I've never made money on the name. I'm back to thinking that's going to continue. I'm thinking maybe I should just get out now and cut my losses. I'm not.
I don't know about that, Dan. I would bet
their whole thing is, their whole thing is, will the subscription model that they're trying to figure out how to put together works, and that could be a year away. So
if they don't make it work, it's time for Twitter to figure out a sale, because they've literally, I don't understand. I can't think of a company that's done a worse job the last decade of not taking advantage of their platform. So if they can't figure it out internally, maybe another company could. And that's what I'm guessing is going to happen. Their board is not going to let this continue if they don't figure out a new revenue model. They will sell.
Yeah, let's throw, we haven't been talking about the virus stocks much, but Sorrento Therapeutics, which
let me just say, it's all I ever see on Twitter now is people talking about that stock. It's literally like,
so is it time to short it?
I remember the day it went from 1 to 10, and we were talking about it, and I actually went long. I don't remember what price, but this thing is one of the hardest stocks to get an arm around, and it got up to almost 20, and now it's back to 1240, and now it's up from there. It closed 1240, and it's up $1.20 to start out here.
I'll tell you, like even Kramer was on. He brought them up on his show and said he liked them. This stock, though, I've never seen a stock get so much hype on Twitter. Like it's literally, I'm not even looking for it, and I don't know if there's a few people I'm following that keep talking about it, but I see so much about this. It's insane. It's like all people are talking about it.
And every time the guy goes on CNBC, he sounds like, yeah, we have the cure, we have all the treatments. Like, whatever you need, we've got it. I don't know what this guy has got the answer to everything. You know, the cure for heart attacks, cancer. I don't know.
I mean, to me, I'm personally like, and I know we've talked about it a little bit, but I'm more inclined to play like the really big drug names, which all seem like they're trying to get to new highs. Like these types of names just scare me.
I think that's the smarter play in general, but you're not going to get the day trading action that you will in a Sorrento.
Yeah, like SGen, I loaded back up on when it dipped under 155. That's been a prime example of one of those companies that clearly is in a great spot with what they're doing. And, you know, all these other momentum plays in this world have just kind of, I think, have these guys fall under the radar a bit since their earnings.
Look, J&J, we've talked about some of these other names. They all look real nice, you know, on the charts.
Can you put Bristol into that category? Bristol?
Yeah, I don't know. Does Bristol, though, have any direct? I mean, Bristol's doing great, but I'm not sure they're involved with, you know, COVID, which doesn't really matter. I mean, there's plenty of other things.
Yeah, I mean, COVID is not going to be around forever. So,
well, I think it will be.
What?
Well, some interesting points that people have been making is some of these other names now I think people are starting to realize have taken such a backseat, even though they have year-round businesses, regardless if there's a virus or not. Like I think it was J&J with the Botox, and like there's just different types of Medicare that have been kind of put on pause due to like, you know, practices being closed for everything but COVID. And that's just very temporary. Like all the other health needs outside of COVID, they still exist in this world. And even though people aren't talking about them, like if you need a knee replacement 6 months ago, you still need it and you're going to get it. It's not like that nothing else is happening except COVID. So
that's why I love ALGN. It's the same mentality. People need to get their teeth straightened regardless of COVID.
Yeah, but there was also a report, I think yesterday, Mike, that unless you need to go to the dentist, it's still dangerous to go and have things done.
Mm-hmm. That media has really been something. I've been to the dentist here, so I don't understand that at all. There's been proof that that's not the case. So I don't know who's bringing that up, but either way, there's a pent up demand in that space.
Hey, one stock that we never talk about, but has been getting a lot of activity, not so much volume, but movement, is CLXT, which is a spin-off of CLLS. Do you remember that one, CLXT? There's not a lot of volume here, but look what this stock has done in the last week.
I spun CLLS. I don't really know why.
Not CLLS, CLXT.
No, I know. I was just talking about CLLS because
I haven't owned that one in years.
I just never. Yeah, wow, that's insane. I mean, look at that. To the far right, just straight up green candles.
Yeah, where was this yesterday?
What do you mean? Where was this yesterday?
Dad, I want to hear about these before these source. Like I don't want to be looking at a chart that's soared that I'm not in after the fact.
You sound like Dave Portnoy.
Let's go back though. Look at this though. Is this not a little bit long term? Just like look at the two directions of the extremes here. When you look at the dips and then the peaks. I mean, this is just the S&P chart the last few years, and each dip gets bigger and bigger. I mean, like people that are way smarter than me are saying the next dip's going to be way worse than the last one. When it happens, it might not be for a couple of years, but like
Gunlack was saying that, the Bond King.
The extremes on both ends keep getting wider and wider. And that's why, like I'm saying, obviously, if we get through this top period and we get into the next rally, it could be so big. And in saying that, if we don't and it decides it wants to go down and plow through these trend lines, I mean, I don't know how you could look at this and not think that at some point there's going to be another dip that's way lower than the one we just had.
Well,
just
if we see a downturn worse than March before that, what you're talking about, then this world, it's been a fun run. It's been fun. It's over at that point. Like, I don't think the world can literally afford for that turmoil to take place with what's going on right now.
Well, I'm just saying that when you look at this, it's hard to not think that is going to happen.
I don't see it. I think the world is set up with enough tools with the Fed, as we've seen, and I don't think that's happening. There's too many ramifications when the market goes down with a lot of things with health and suicides and obviously the economy.
Oh, wow. Our show,
we can't do that.
I didn't even realize it's already been 30 minutes. All I'll say to end on that is you don't know when you're going to either get a new set of people working the Fed that decide that what's happening is just not the way it should be, and that are going to let things shake out their own way. I mean, if you look at what happened in 2018, that was the dip here. And that was just them trying to slowly inch up interest rates. And
that's not going to happen, though, because of this pandemic, Dan. That's why there's no chance of that being a thing in the near future. No chance.
In the near future, as in, maybe the next few months. But wouldn't it be crazy in 8 months from now if they try and do that and the market just absolutely explodes?
I think it would be crazy. I think there's way too many unknowns from this pandemic still to make that type of judgment call from 8 months from now. I don't.
What are your thoughts? Just looking at the chart. I mean, it's an extreme chart when you look at the long-term chart.
Look, you're going to have big falls, and when the falls happen, they happen hard because that's psychology. But historically, every time there's been one of these, it's the best time ever to buy. Now, they may be coming closer and closer together. I don't know. But it's never been wrong to buy those giant dips.
Well, yeah, because you're betting on humanity existing. If you buy the dips and it dips more, what happens?
Yeah, but if you wait for the dip to buy, you don't know how long you're waiting. That's the problem.
Yeah, you just want to be a little careful. Yeah, it's just good to definitely tread careful at these levels. I will say that, I know we just started doing the show a couple months ago, but we've been in the market, Dad, your whole life, me and Mike for, I think, about 6 years now. And what happened here in 2018 was my big first learning experience in the market to not get caught with your pants down. It took me years to recover. And that was not nearly as intense as what just happened last year or 2 months ago.
That's because you had margin.
Yeah, I'm just saying that's kind of what happens when things seem to be they're going great. The confidence turns into, let me throw every penny I have at the market. Everything's just going up, up, up. And when it turns so fast that good luck trying to position yourself for it, because all of a sudden
the reason the downs are so dramatic is because people are on margin and they have to unwind at prices they don't even want to sell. And that's what 100%. Causes it to get out of control.
And you're right, but that's not changing. That's going to continue to even get more extreme is what I'm kind of saying.
Well, yeah, that's possible. But the point is, if you're not on margin, that gives you a great opportunity because you don't sell into those. You wait.
Yeah, I know, but I've realized to really get next level paid, you got to have balls, and you can play this treading water game and make very little money for years in your prime, or you can go into margin and have some conviction. And that's what I'm doing right now.
But maybe the time to go into conviction and margin is when those big falls happen. When the probability gets over 80.
Yeah. I went all into margin at the heart of the pandemic.
Anyway, we're way over today, guys.
I think one of these days we should just be on here for 24 hours, see what happens.
And one of these days we should be on here when the market actually is open to go over.
And have be on throughout the day. It would be an interesting one-day marathon, just the Rolland market mashup being from open to close.
I mean, I would love that. As it is, I'm dialed into the markets from open to close anyway, so that'd be great. But
today we got Lodell. We're bringing in some new community managers, so that takes fun.
Yeah, There's a lot of low Dell hang out.
Yeah, I want to see low Dell on this ticker. We need to be looking at that chart here in a couple years. So let's get to it.
I love it. All right, let's do it.